want to talk a little bit about tax considerations and setting up a new company. I'm not a tax lawyer, I'll say that right now. I'm a corporate guy, but we have tax people on staff who are the experts and can help you with setting up some of these things. But there are a couple of things that you should consider. I mean, many people will have heard about shreds. These are the refundable tax credits that technology companies get. It's really great to set up your company so that you can take advantage of shreds, so that you can take advantage of some of the programs that are out there. And to do that, for a lot of them, you need to be what's called a Canadian-controlled private corporation. That basically means that more than 50% of your shares have to be held, voting shares have to be held by Canadians, and it has to be an active business and so on. Most of the startups that we're talking to will be active businesses for those purposes. And what that gets you is, for every dollar that's invested in R&D by your company, you'll get 30 cents back from the government. Literally 30 cents. It's not a tax credit. It's actually a check that they will write to you. So you want to try to maintain what's called CCPC, Canadian Controlled Private Corporation status, for that reason. The other really important reason for Canadian citizens who are taxpayers here is that if you hold your shares for 2 years in a CCPC, when you sell them, you get access to your lifetime capital gains exemption. That's the $750,000 exemption that everybody has through their lifetime. When they sell shares of a Canadian-controlled private corporation, you can get $750,000 tax-free, essentially, if you've held those shares for 2 years. So that's one of the reasons, and we'll come to this in later discussions, that we like to recommend going with sort of issuance of shares with reverse vesting terms attached to them. Because if you issue the shares on day one, then those shareholders essentially get the benefit of that 2-year hold period right from the beginning. And if you don't do that, if you issue options, for example, they only get the benefit if they exercise the options and hold, which people rarely do.